first session of the day will be focusing on the topic of building founder resilience in the fintech space. Here to co-moderate this discussion are Varun Mittal, Global Emerging Markets fintech leader at Ernst & Young, who incidentally just launched a new book, Singapore, the Fintech Nation. You have to get your hands on a copy because it has so many huge nuggets of information, especially talking about how it takes a village to raise a child. Well, it takes the village to launch fintech startups, talking about how Singapore is putting in place an ecosystem that really helps it become the fintech hub of the region. Now, also co-moderating with Varun will be Pauline Ray, Managing Director and Global Lead at Expand Research, a Boston consulting group company. Joining them to provide insights are Richard Koh, Founder and Chief Executive Officer of M-DAQ Group, Abhishek Chatterjee, Founder and Chief Executive Officer of Tookitaki, Nicki Ramsay, Founder and Chief Executive Officer of CardUp, and Chief Executive Officer and Co-Founder of BasisAI, Feng-Yuan. To pose questions to this panel, click on the yellow button beneath the session window. Let's now go over to Varun and the panel for the first discussion of the day.
Hi, welcome to the last day of the Singapore FinTech Festival. With me, we have a fantastic panel to talk about resiliency in FinTech coming from founders. And also with me, the very hot, fresh from the press, Varun, who published this week the book, Singapore, the FinTech Nation. Just since we have him here, before we start with our great panelists, I'd like to ask Varun, what drove you to write this book?
Thank you, Pauline. As a former founder myself and an investor working with a lot of different founders, what I found was a unique, relentless pursuit of excellence in the founders here. The never say die spirit, in spite of competition, fragmentation of markets, different challenges for evolving regulations, how to scale from a small market to become a global company. I felt that these are stories worth telling. And incidentally, the idea was incubated when I was with Richard in Israel, looking at the startup nation journey of Israel. And we thought that this is a story worth telling. And that's what we have for you here. And we'll bring some of these founders and their stories now in this panel with you.
Perfect, thank you. So here we have 4 of our founders from Singapore. So Nicki from CardUp, Kevin from BasisAI, Abhishek from Tookitaki, and Richard from M-DAQ. So I'll give them the opportunity to introduce themselves and to speak a little bit more about their fintechs before we kick off.
Abhishek.
Thank you for inviting me to the panel. It's a great honor. About Tookitaki, we are an AI-based platform to help financial institutions combat financial crime. What really separates us out from others is our approach to federated learning, where we kind of federate typologies, learnings from various industries to make combating AML more powerful and more effective. Little about Tookitaki, we are a 5-year-old company. We initially started growing up very small from Singapore, but now we are globally adopted, and love to share our journey and experience today in the panel.
Kevin? Nicki?
Hi, everyone, and thanks also for involving me in the session today. I'm Nicki. I'm the founder and CEO of CardUp. CardUp is a Singapore-headquartered payments company, and we improve the way that individuals and businesses pay as well as get paid. And the primary product that we're known for is a term we call credit card enablement. What we mean by that is that we enable individuals and businesses to make and collect payments by card to recipients that haven't taken card payments in the past. So think, for example, paying your rent to a landlord. And in this way, we help businesses make use of an available credit line that's sitting in their pocket to improve their payables. And I think we've been around since 2016, and over the last few years, diversified our product range. We now include merchant solutions as well as tools and software that help businesses automate and digitize their payment processing. And whilst we're headquartered in Singapore, we do have regional operations as well in Hong Kong and Malaysia. Looking forward to the discussion today.
Richard?
Hi, I'm from M-DAQ. We are 11-year-old homegrown fintech. started in 1st of January 2010. In the startup space, probably once you cross the third year mark, you're probably going to stick around. So we are considered a little bit old for this. And yet at the same time, we are always looking at the business as a day one mentality. What M-DAQ does is we're founded on one mission alone, which is try to see whether can we create a world without currency borders. Because everything we do, it involves two currency and there's a foreign exchange. In the last 3 years, since 2018, we have managed to turn full year profitable, and ever since then. And our products and services are partnering platforms, remittance company in about 45 countries, serving probably 3.5 billion people indirectly. Thank you for having
Kevin?
us.
Hi, my name is Feng-Yuan. I'm CEO and co-founder of BasisAI. BasisAI is a company that helps enterprises scale responsible AI. What we see in the challenges that enterprises face are, I think, first, being able to productionize their AI models, taking it from the lab bench into the factory line, so to speak. And secondly, we're seeing concerns over the black box of AI. So I used to lead the data science and AI efforts for the Singapore government. I saw these challenges. My co-founders, Linus and Sylvanus, worked in Silicon Valley at Uber and Twitter, scaling AI for a long time. And when we joined forces to start up BasisAI, we wanted to tackle this really hard problem of how do you have both innovation in the use of machine learning, but at the same time do it in a responsible way that's not a black box, both to consumers, but also to regulators and even internal stakeholders. So that's a bit about BasisAI. We've been around for about 2 years, and very fortunate to have Temasek and Sequoia as investors in the company.
So with that, it gives you a bit of an insight into the depth of the different types of fintechs that we have in the region. And I'd like to start, first of all, there's to discuss really about the resilience. We've gone through a very difficult time over the COVID period, and founders, I think, as the discussion we had with the VCs yesterday, they have really shown a lot of grit and resilience. So why don't we start with you, Richard? Give us a bit of a sense, what happened through this period, and what are some examples of resiliency that you can share with the audience?
Richard?
Yeah, actually this is not our first valley of death. As a company, we went through that in 2012. And because of that, I think the core team has gone through once. We are battle hardened and experienced. At that time, we ran out of cash and we just went on 1 year no pay. In fact, we had to borrow money, sell house, sell cars, borrow on overdraft, just to keep the company going on a minimum basis. We call it hibernation mode. But during the COVID time, the biggest challenge wasn't physical, but it was psychological. Right at the very early stage, we had to assure our employees, our members of the family, the M-DAQ family, that we are going to protect them in terms of their livelihood, their payroll, and everything. And we'll try to make things work, whether it's a work from home, the digital aspect of things. And what we did was probably a bit unusual. Back in March, April, and May, we actually brought the payroll from end of the month to beginning of the month. And whatever you say at the town hall, that everything will be fine, your job is secure, nobody will believe in it unless you walk the talk. So if we have paid you the payroll for the entire month at the beginning of the month in full, there's no way we're going to cut it because you have already been paid. And later on, we realized that there was some congestion during peak hours, so we tried to shrink our workday from 10 to 4, call in the office, the rest of it work from home. The whole idea was to just avoid peak hour traffic. So these are all the things that we tried to do to start from the basic of taking care of our people. And once you do that, everything else will fall in line.
Wow, that's very, very inspiring, and the way you handled it. Nicki, any stories from your side?
Yeah, I mean, I definitely sort of echo that the first priority was, of course, ensuring people first in the team's well-being. I was personally pretty amazed to see how adaptable everyone was. the team's ability to sort of shift, and maybe we have the advantage, obviously, of all being technology companies, so we have probably a sort of inherent digital ethos already embedded in the team, but I was amazed at people's adaptability in the new working environment. But I think beyond that, the key, I think, really has been around just assessing, or two things really: a scenario planning to plan, make sure we have a plan for every single eventuality that could come our way. There's so many unknowns in this current environment, so to have brainstormed those and have a plan within the team, I think has been very helpful. But the other thing has just been improving or rethinking our product mix. With the changes that COVID has brought about, it's questioning all of the assumptions, looking at what really matters, and thinking, is there anything we could be doing differently or new in this sort of new norm or post-pandemic world that we're in?
Thank you, Nicki. And for our two AI founders, you guys do more of B2B sales. So it's a business, your customers are businesses or banks, and it takes much longer sales cycle. So did you see any specific changes around that, and how did you handle that in the last, I would say, 6 to 9 months from that perspective?
I can start. As you would know, right, in the first part of the COVID crisis, the banks generally went into what they call as a BCP mode, where most of sort of the buying in the initial days kind of stopped. So I think we as a team, and I echo what Nicki said, right, adapted to the situation. The team spent a lot of time understanding what do our clients need to make these sort of engagements happen. So instead of just selling our product, we went on understanding what do they need, and we as a team can sort of customize, change the product to adapt to that need. And it always says, right, a product market fit is not one thing, it's a continuous cycle. And that kind of amplified what we did. We understood what they need. In a COVID situation, scams, frauds went up. Being able to federate those ideas into a single place where sharing of information can happen really aligned with our B2B customers. And that actually helped us sort of continue the engagement and not just get stopped. So as a founder, I would always ask budding people to kind of not think product market fit as a one point, but a continuous line over time, so that you can adapt and kind of deliver to what clients need.
That's very, very, very valuable. That it's a journey. It's not once you get it, it's all done and straight IPO. You have to keep iterating. That's something which is very important. And Feng-Yuan, if you could share something from your side in terms of how your business looked at it, and specifically around these challenges.
Yeah, I think once I think these banks and organizations emerged from the BCP phase, I think they were looking further longer term and saying, how is the world going to change? We saw a lot of a kind of greater impetus almost after the initial 2 or 3 months to think about digitization, and with that, how they can use data and they can use machine learning and AI more effectively. So I think it was a kind of a little kind of freeze moment, but after that, I think in the longer run, this has kind of really made companies think a lot more about how they need to change the way they work, and that involves a lot of the use of digital technology and the use of data. So I think for us, it's been also, while being very sensitive and being alert to how the world's going to change, also having the right balance between that and the patience and the right time, right? Talking to customers, but also figuring out, are they, at this point in time, focused on BCP and planning for COVID, and when the right time is to really approach them with a solution that meets their needs.
Fantastic, thank you. And what I'd like to follow now is about the investment. Yesterday with our VCs, we spoke about some of the investment gap, especially some of the early stages. We've seen an increased interest in mid and mature funding rounds, especially around in the region. And in Q3, 65% of investment went to those mature rounds. Where do you see the gap, and have you experienced any challenges in fundraising or staying connected to the network of VCs during this period?
Abhishek?
the way we have seen, especially from our side and few of our colleagues in the space, companies which have shown resilience during this period, the existing VCs helped quite a bit in terms of supporting their the companies in a way. I think they allocated a lot of their existing sort of pool into existing companies, which I thought was a very good move. Because as you said, right, it takes up a village to create a startup. It's not one, and then one side is the team, the other side is the investment. So what we personally saw was, and across our portfolio companies, is our the existing investors kind of chipped in and helped us. And what we are also seeing is that the other thing is that the overall ecosystem of seed rounds to help companies kind of kickstart, bootstrap the process has also kind of opened up quite a bit. The middle round has been a little difficult, the Series A-ish round, but from B round and seed rounds have definitely kind of picked up over the time.
So it's the messy middle, which is the challenge. Feng-Yuan, how do you think?
Yeah, I think one interesting trend is I think a lot of VCs are becoming a lot more global in their outlook. They realize, they have to do conversations and find out about companies on Zoom, right? And I think they then started to think, hey, do I need to kind of only invest in geographies that I'm familiar with? So in a way, we've seen a kind of greater globalization. We've had conversations with VCs and investors all across the world to some extent. So it's kind of, I suppose, liberating as well, because I think VCs are really rethinking the way they work with startups. We spoke to a whole bunch of VCs that are using data and machine learning to identify which are promising startups, and that's not just limited to kind of the regions or the people they've known from before. So I think that's particularly interesting. I think what VCs are looking out for is kind of traction. Obviously COVID is a difficult time, but if founders are able to kind of push through that, be scrappy, kind of find footholds, find traction, even in these slightly more challenging times, I think VCs will kind of reward that. For us, it's interesting, just like Abhishek, there are not that many kind of B2B startups in the region, so the region is always kind of known for B2C. So I think but I think it's emerging. I think there's a couple of really exciting B2B companies, and VCs are starting to take note.
That's very inspiring and interesting from that perspective. And Nicki, while everybody was like slowing down the business, you went to the opposite side. You expanded into 2 more markets from 1 market. So how did that journey, and how was the investor support, and how did the investors take to the idea of that instead of slowing down, I'm going to double up and go all in?
I would say that we definitely re-looked a lot and assessed these plans and reassessed to make sure that was the right decision. But I think a lot of those plans were already underway prior to COVID. And I think in a way it was just changing the way in which sort of the delivery model around that. So obviously we weren't able to get into the markets. We had to do a lot remotely. We fortunately do have a couple of people already on the ground in these markets. So it was really just changing, I think, the way in which we executed, which I think testament to again the team that I mentioned earlier around their adaptability and their ability to do that. But I would say that it's sort of related to the question on investment and funding as well, and the support of the investors. I think one of the challenges we face in this region, aside from just perhaps a shortage of this sort of early stage investment that we were just discussing, is also just the level of fragmentation that exists. We don't have the luxury of perhaps companies, tech companies in a much bigger market like the US, where you can perhaps focus on one market and one thing for a pretty long period of time and really get scale and revenue. I think here it's important to ensure that you can scale and move into new markets, because we're operating in a very different landscape and a very fragmented region.
That's very, very helpful to look from that perspective of how these kind of pressures on fragmentations and not having scale in one market and having to go multiple market applies. And that points back to, again, the resilience of the founders, that They know that they need to cross multi-market. One country alone is not enough. And that brings me to Richard. You are one of the very few profitable companies with, last I checked, 50 or how many million in bank already. What kind of conversations you have with your investors? While every investors are like asking burn rate and stuff, your investors will having very different conversations. So how does a chat of yours looks like with your investors? Because I believe it would be quite different than like 99% of rest of the fintechs.
Well, at the start of the pandemic, they did send out a standard note to say, what's your runway? Is it 6 months, a year? So we replied, 6 years or something like that. And then they stopped asking us any further questions. So we have been largely ignored for the last couple of months. But not to say that we didn't go through a challenging time, because as a B2B play, our business rely on our partners. And our partners who may be a B2C play are certainly affected, especially if they are in 95% of the industry. Unless you're doing PPEs, you're probably on the negative part of the equation. So during this time, the challenges for us is not so much a fundraise, because we haven't been doing a fundraise for 5 years. But we do see that the business development effort does take a lot longer. Those that we already have a relationship, great, you can do Zoom calls and get to where you want. But those you have never met for the first time, it's often very hard to build a relationship virtually on day one. Fortunately for us, at the start of the COVID, we kind of allow most of our staff members to go back to their home country. That was a bit of luck and a bit of foresight, because thereafter all the borders starts to shut. And M-DAQ, although we have 65 people, when I last checked, we are represented by 15 nationalities, despite having a 2/3 Singapore core. So with that 15 nationality in the other 1/3 that's represented, we suddenly have local representative in 14 other countries. So my co-founder, my CTO, he's Japanese, and he had to go back to Japan for the last 7-8 months. And this year has been doing phenomenal activity in Japan. We have launched a few products, did a few POC, a few press releases, all because we have someone on the ground. And the same thing, we're expecting some good news from Korea as well. So the benefit of having an international workforce, due to COVID, they're all back at home, working from home, actually allows us to continue our activities on the ground.
So, and then Richard, that's really interesting, especially around the forging those partnerships. I think it's important. And Abhishek, you just announced a recent partnership, which I'm sure was on the works already. But how do you continue those partnerships and selling into banks or other types of financial services during this BCP mode that was described earlier?
The way I kind of think about it is that building AI products, especially in financial crime, is some sort of a evangelical sell, because regulators around the world haven't seen AI-based AML products, neither banks or neither financial institutions. So being able to have initial champions who has actually gone over your product, in production parallel for almost a year, and sharing their experiences of how the product worked, how AI has actually helped them in tackling financial crime, makes a lot of difference. Because when you have these sort of champions and case studies, that allows the ecosystem to kind of grow up and then take those chances. So from my point of view, right, being able to kind of create and build those champions who can really help you create those case studies and then use that to enable others is the way that you can scale. And that's what we have been lucky with a few of our champions who were great ambassadors of our product. And that's how we have seen that our product has really scaled, not just locally, but across the region and primarily in the North American markets as well. So case studies and strong champions were key to our success.
Well, that's good. And how far, actually, I'm interested to know, Abhishek, you've managed to go expand outside of the region during this period?
The way we have, I think as Richard said, right, one of the things that we initially did was, we asked our team members that they can work from home, and they don't need to be in Singapore or be in office. So everybody was in a distributed environment. So a lot of our team members who were originally from the North American markets, they were there. A few of us was in India, a few of them were in Taiwan, multiple regions. And what has really happened is that when teams started to work in a distributed environment and they are in their locations, we have seen a lot of traction happening, because then you can speak the common language, especially in a business like us, which is highly sort of regulated. Having somebody locally speaking that language made a huge difference. So we have seen sort of a lot of growth in North American markets, as well as countries in Asia where our team members were there and were able to make a dent.
So Abhishek, you brought in a very interesting point, and Richard also said that. So if it's so awesome to have distributed, are you ever going to go back to the old model, or you're going to continue? Is the decentralized way of working and operating your company with having ambassadors with local language and everything, is that going to be future for you? I mean, are you going to go back? And what does this mean for a hub like Singapore? Like, if that is normal, then where do you see the role of how Singapore brings together people and stuff? So how do you see what's the default state after this? After the vaccine is raining from the skies and everybody has it, what happens then?
So Varun is trying to trip me, but the way I look at it is, as Satya said, right? Social capital is very important. Team kind of coming together and actually being a team is as important as sort of a distributed environment. So the way I look at it is a hybrid mode, where teams should have the flexibility to come together and bond as a team, as well as the flexibility of working in a distributed environment. So a hybrid strategy is we in Tookitaki is kind of trying to create. There's no playbook for it, but what we are trying to see, is there a way that we can have more offsites, right, at our locations, almost like twice a month, right, so that the team can get together. But I strongly believe that the social capital of coming together, kind of unites the team. So we need to have that, as well as the flexibility to have a distributed team.
And Richard, how are you going to look at your 15-country brand ambassadors and frontline crew after the vaccine comes?
I think we have adopted a permanent work from home or work from wherever you like strategy, even before our own government here has mandated it. And when they relaxed it I remember it was phase 2, we kept it that way. In addition to that, we even set up a little hardware store within the company. We gave everyone 2,000 credit to equip them with a, what they call the height adjustable table, a gaming chair, a Bluetooth noise cancelling headset, Wi-Fi mesh printer. So they can pick and choose whatever they want as long as within 2,000. What we wanted to do is not just let them continue to do that, working from home, our remote location, but we want to equip them so that they are productive and comfortable. Because not many will have the luxury of a large home with a proper desk. Many are sharing a dining table with their family, and some have a foldable table in their one-bedroom rental. So we always focus on the welfare, because to that, then the productivity will come through. So we are going to adopt a permanent remote working, because what we have found out was with all the digital technologies, it actually works. Frankly, they are even more productive, because if you recall this year, we had something like 5 long weekends, but we never had those long weekends because there was nowhere to go. So to all of us, Mondays to Friday, whether it was a public holiday or not, we just continue because we didn't feel that there was a need to stop. So I think our productivity actually went up during this time.
Richard, that's very interesting, and you talked about tables and dinings. Explain me, how does that impact your office kitchen? So for our viewers, so Richard has this awesome kitchen where everybody in his company can go and cook, and they have their own company branded dish as well. So tell me, how does the kitchen work for our audience, and what will happen to that kitchen now?
The kitchen is still very much in use. In fact, this week alone, we cooked 3 times. Often we have a group of guests that's coming. And we try to use that as a way to sell. We say, why not we host you for lunch, home-cooked lunch, at our little kitchen in the company? And they're all very excited. In fact, yesterday we hosted 7 guests from OCBC. And 2 days ago, we had another 5 more from another company. Yesterday, I think we had curry chicken and prata, homemade prata in the office. So the thing about M-DAQ Kitchen is that we use that as the heart of the company for outreach, for us to basically bond as a family. There are no external hired help in terms of who's going to cook, who's going to wash up. It is almost like an extension of your campus life. It's like, when you share your instant noodle with your hostel mate, except here we have slightly better than instant noodle. And ironically, the cafe, we call it Go Dutch Cafe. You might think that it sounds like everybody has to pay for their own meal. Actually, the company pays for it, except that the whole cafe has a Dutch theme. Because when we were renovating it, I was in Amsterdam, and I noticed that there was this primary color signage every other shop. So I made an inquiry. It was a Mondrain. So we decided to just have that as a primary color. And what is Go Dutch or Dutch theme without Van Gogh? And clearly the Van Gogh are not real because we couldn't afford them. So it was all bought from AliExpress at $10 a piece. It's just a replica. But the whole place now feels a little bit more upmarket. But please, welcome to visit us when you have a chance.
Richard, I think you're giving me a lot of ideas. My team are probably not going to like you now. That's fantastic. I love it. Nicki, what are you currently doing? In anything similar that you're doing currently with your team?
I think we've gone to a hybrid model in that we've given people flexibility. We have an office space, but the team is working from home, I would say, the majority of the time. I think I put it out to the team. We had a discussion, and I think, as Richard mentioned, I feel everyone feels very productive working remotely and in a distributed team arrangement. But I think to sort of break the monotony, maybe there is also preference to come together from time to time and perhaps do 1 or 2 days in the office. So that's the model we've adopted, and I think it's working very well. It gives people the flexibility, and as I mentioned earlier, I think all of us as tech companies are probably fortunate that we already have a sort of digital way of working and ethos, which has enabled us to adapt to this fairly well.
And do you think you'll be going back, or you'll be staying in this hybrid model?
We're staying in the hybrid model. I believe it's working for us now, so there's no need to change it. And there's cost benefits as well, I think, for the company. We're not needing to have the same real estate or office size of office space in this arrangement. So I think I see this continuing for the foreseeable future.
Great. Feng-Yuan, love to hear from you if how this hybrid model will remain for you, or will you be going back to the old times?
Yeah, I think the answer is definitely a hybrid model, and I think we've heard from I think the others on the panel as well. I think the nuance is what you want to do kind of what you can do kind of remotely and what you kind of need to do in person. And this kind of debate between productivity and culture. I had one engineer say during the circuit breaker, I'm a lot more productive, but sometimes I feel like I'm less of a team. And the anecdotes from Richard and also kind of from Abhishek and Nicki on just how teams can be more effective and more productive. At the same time, the importance of that kitchen. So I think for some types of activities, product, right? Engineering teams are very happy working kind of remotely, but we make them come back in small groups, particularly for kind of backlog refinement, for product ideation. I think those sorts of activities it ends up being a lot more kind of creative, a lot more productive in person. I think with sales teams and sometimes where there's kind of individual work, working in the distributed way makes a lot more sense.
Thank you, Yung-Fung. And because Richard talked about how he saves on client entertainment budget from his own prata shop, I want to bring about one of the stories of how Singapore founders find ways to solve problems in the most unconventional ways. Richard, I'll put you in spot to tell us about the Cruise and Jack Ma story. So and I'll let you describe the whole journey of Cruise and Jack Ma.
I think it was reported by another publication back in 2015, sometime in January, just before the Chinese New Year. One of our investors basically told me that he had a chance to go on the cruise, apparently with Jack and family, and asked, do I have an elevator pitch for him? I do not really know for sure whether that meeting actually happened, but 4 days later, Lucy Peng, at the time she was the chairman and CEO of Ant Group, she was in Singapore and she wanted to meet up. So I guess part of the meeting must have happened. And the next 9 months, we tried to pitch a new idea on what eventually became our second 5-year of growth, which is to pivot from what we originally started as making institutional FX work for stock trading at the exchange level to one that is now powering a lot of the e-commerce, remittance, payment network behind the scene.
Fantastic. That's really interesting. I've heard about this story. So back to resiliency. Love to hear from our founders. What were some of the more difficult decisions that you've had to make during the period?
Did you guys went through a journey of like some kind of cost freeze, some kind of reducing work hours, like readjusting your spending expenses? Were there any sacrifices which impacted you or the team in monetarily or non-monetarily terms?
I can start on that one. I mean, I think one of the big challenges is that we still wanted to achieve so much, and we still had ambitious plans for this year, despite the circumstances. But obviously, had to relook at the way in which we could achieve that, and that definitely meant cost cutting, certainly in kind of capital preservation mode, until we had some greater certainty of how the year was going to pan out and what impact that might have on our revenue. So obviously, with very little data at the beginning and without being able to sort of see 6 months ahead, we did cut back, and we did, certainly in terms of marketing spend and these kind of things, we reduced the team. I'm fortunate to say, we retained everyone. We didn't have to make any sort of displacements, but I would say that we did a lot with the team that we had, rather than hiring at perhaps the speed we had originally planned as we'd come into the year, and that obviously created additional pressure on the existing team to sort of be delivering all of that, but with very, very limited resources.
And Feng-Yuan, if you and Abhishek could share from a B2B side, how did it impact the hiring and salaries and all of those kind of stuff for the B2B founders?
Yeah, I think for us, obviously when COVID hit, there was a kind of people didn't know really what to expect. Not that many data points. So I think we immediately took kind of decisive action. We had huge kind of hiring kind of growth plans, and we kind of put that on pause for a little bit, trying to do more with the existing team, I think. But we also kind of had wise advice from members on our board who said, be very alert, be decisive when you need to, but also when things do pick up, right? You want to be in a good position, and if you've got a strong team, if you haven't kind of been reckless with your spend, it's about kind of biding your time, hibernating, but being poised to kind of seize the opportunity when it arises. And we found that advice kind of pretty sound, because again, when people could again start meeting in person, kind of circuit breaker, we see a lot more interest in digitization and use of data. So that was kind of very sound advice. So it's almost like there's a knee-jerk reaction to want to be decisive, and that's super important. But also finding that right balance, I think, was the hardest thing.
Mm.
Right. So. The way we kind of looked into the issue was that in the early days, we took certain decisions about how we wanted to grow our business, meaning we had a plan. Now, one of the things that we learned early on in the business, as I think Richard had pointed out, running a early stage company, it's like a sinusoidal curve. At one point you're high, and then the second point you don't know, you're at the bottom, right? So you just need to understand what is your end goal, what is that goal post, and just work through that. Now, in that journey, what we realized is that on one side, definitely you cannot be aggressive, you have to be cost conscious. But on the other side, if you get into some sort of a hibernation mode, especially B2B companies, either you are then beaten out by global companies who have a bigger budget, larger team, or by internal sort of team members of the banks who are also trying to build that internally in-house. So we took a decision that we would be very conscious about how we would grow, hire, and build the team, but we also took the decision that we do not want to get into a hibernation mode so that 6 months down the lane, when the banks get out of that BCP mode, we are not prepared, because we realize that we need to speak to our customers, and the way customers going to use our product would be quite different from what they used to do in a pre-COVID situation. So there a lot of work has to be done. So we, I would say, took a more aggressive stance to sort of revamp our product, grow the team, and of course do that in a very cost-conscious way, not in an aggressive way, but we never went into a hibernation mode. That is actually paying up for us, because when the client realized that these guys actually spent time with us, they did not pitch our product, they talked about the need, and now once I am in a better state, they are coming back and saying, hey, we heard you, and now you have the product. They're giving us much more time than they would have given in a pre-COVID situation. So taking that approach of not completely going under the burrow, being cost-conscious, and still kind of focusing on the product in this downtime was some sort of strategic decisions we as a team took. And I would say, when I say we, like everybody in the team supported that, and that's why we are where we are.
Great, thank you, Abhishek. Richard.
Yeah, maybe just to clarify, when I earlier mentioned about our 2012 one-year episode, we didn't hibernate the business, we just hibernated our paycheck. So everything carried on as usual. Even when we need to fly around, we use personal air miles and hotel points, or just bunking with a friend. I remember the time when I had to do fundraising and meeting new clients in UK. It was Christmas. It was one of the coldest Christmas, not because of the thermostat, but because you feel hungry, you feel vulnerable. And I still remember meeting all my ex-banking friends just to say, can we meet for lunch and dinner, so that I don't have to pay for my lunch and dinner. So essentially, I went on the whole trip without spending anything. It was all miles and points and friendship. So, but at the same time, I want to also further expand on this idea that during COVID, when many of our businesses are affected, or our clients' business are affected, and therefore we are affected, this is probably not the right time to just do tit for tat. Many investors will look at it and say, look, if your business is down 30%, why not you try to cut your costs 20, 30%? That's actually not the right way, because there will be an upswing coming on. And if you do not invest, continue to stay invested today, you start to really hibernate your effort, your technology, your sales force. And when the opportunity comes along, the next wave comes, you will not be there. And I totally agree with what Abhishek said. Yeah. So we cannot hibernate our effort. And if you just wanted to cut the cost, make everyone feel the painful, then the leadership will have to take the initiative. So in the past, we believe in this concept. Some of you may have heard, it's called servant leadership. So during tough times, we start from the top down. And during good times of recovery, we reward from the bottom up. And so far, this has always shown that if you want to be in a leadership position in the company, then this is the sacrifices that you always have to take first, and you take your rewards last. But this is our philosophy. Yeah.
Thank you, Richard. And I think we've heard a fantastic playbook from all of the founders on how to deal with difficult times. But what would be really good, obviously, in Southeast Asia, in Singapore, FinTech nation, what would be the opportunities in Southeast Asia are large, and we're having a lot of FinTechs, international FinTechs come to Singapore. What would be your advice for FinTechs coming from the US or from Europe or anywhere that are setting up in Southeast Asia and Singapore? Let's start with you, Abhishek.
A couple of things, right? If you are in the B2B space, we have to realize that when you come to Singapore or in Asia, every country will have their own nuance, their culture, their buying process, and it's not the same. Too many times I've seen like younger early stage companies from US or Europe, right? They think if they come to Singapore, they can win all the markets surrounding. That doesn't happen. That nuance has to be understood well. That's one. And number two is the way the sales process works in the local market is a bit different from the North American market. So just to give you some example, here the investments on an early stage company generally goes through a validation process, which means that the sales time might be much higher than any sort of other places in the world. So when sort of these early stage companies come here, they need to understand that it's going to be a journey and it's not going to be quite transactional, which would be very key for success in the region.
Thank you, thank you. Feng-Yuan, your perspective.
Yeah, I completely agree with a lot of what Abhishek said. At the same time, I think Singapore is a really exciting hub to be in. I think you'll see that generally, even through COVID, even through what's going on globally, Singapore's message is always kind of we're open, right? We're open for business, we're open to global talent, we're open to kind of businesses who want to digitize. So I think that's the exciting thing about, I think, being in Singapore. And I think the great opportunities that you get kind of in the region would be what we're excited about, with, of course, the kind of nuances that Abhishek mentioned, which are very real. But I think there's this tremendous opportunity given the ecosystem that's already here.
And Nicki?
Yeah, I think in addition, obviously, the fragmentation and the local market nuances is an obvious one. But I think, in addition to that, the region is at a very different stage of development, right, versus the US or Europe. And I mean that in multiple ways, whether that's the underlying sort of fintech infrastructure we have, or even within the Southeast Asian region, there's different stages of development for the different countries. So I think that can pose additional challenges that probably doesn't exist in other parts of the world. And so I think companies that are looking to move out here need to be very aware of that, and probably need to relook at their revenue models or even the product mix to make sure that they have a sort of viable business model that could work in such a sort of complex and fragmented space.
Richard, I'd love to hear your...
I think for a company to be based here, it is not meant to be the end market, right? It's a very small 5 million people market, but it's really just a springboard to the region.
Yeah.
If you think about the physical distance, within a 5-hour, 6-hour flight, you practically cover all the way from China down to parts of Australia to India. And this then serves as a very good place for a POC, a proof of concept. Something that you can experiment while you are still experimenting, not in a lab, but in a real world environment. So it is not meant to be the end market, but it's a good regional headquarter, a springboard to serve a third of the world's population here.
That's very good advice. I think now we don't have a lot of time left, but we'd love to hear your predictions for 2021. And why don't we work this way back? And Richard, we'll start with you.
2021, wow.
Yeah.
Don't really have a crystal ball, but I think COVID is going to be still with us for at least the first half of next year. I mean, it's going to be with us for a long time. Even IATA says that business travel will only recover sometime in 2025. But probably second half of next year, we will have a bit more vaccination going on, more synchronized testing, so that the entire idea of having to quarantine 14 days at both sites should largely be replaced by rigorous testing and vaccination. That would then help to kickstart. At the same time, what is good is that many businesses, especially those large traditional ones, who have traditionally shunned digitalization of their business. To them, an e-commerce website is a PR site. They still want everyone to walk through their shop front and sometimes to queue up because it's a limited edition shoe that's coming on. Every one of them now have to realize that you can no longer just do business in a traditional way. You have to go digital. And for many of us here who serve digital businesses in one way or another, that is actually a good thing. Because once it's online, there's no more borders. There's no more physical borders.
And Nicki?
Yeah, I mean, I think this year has sort of accelerated digitalization, by many, many years in a very short space of time. And so if you kind of think of that trend continuing, I would say that my sort of prediction for 2021 is it's going to be a lot about serving SMEs, and I think there's a huge push, obviously, especially in this region. We heard just last week around the new digital banking licenses, and so I think there's going to be a lot of activity in that space, and I think it's going to exist across the entire value chain. What I mean by that is that even other kind of technology platforms that serve SMEs will start to offer financial services, and I think there was some news from some of the larger players like Stripe, for example, a product called Stripe Treasury, where they're doing exactly that, enabling more and more companies across the value chain of an SME to offer financial services.
Great, thank you, Nicki. I think unfortunately that was absolutely fantastic to get some more insights into the lives and the resilience of our founders. But we've run out of time, and with that, we'd like to say thank you to Feng-Yuan, Nicki, Richard, and Abhishek for their time, and also my partner in crime, Varun, who we've had a blast this week, hosting and chairing a number of panels in the Singapore FinTech Festival.
Thank you.